Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Laney and Bert, the Dividend Diplomats. Today we're talking to you about a stock that is up over nearly 13% in the last month. I own over $6,000 of this company. The question is it time to sell and move these funds into a better position?
Hit that subscribe button. Give this video a nice thumbs up. Love it when we talk about stocks to sell and stocks to, that you might want to roll into. Maybe it's an ETF. Bert's here to simplify his portfolio as we continue to try to do week in, week out, month in, month out, year in, year out. Bert, I'm excited to hear about what stock you're talking about today.
Yeah, in my portfolio, like you said, I'm looking to possibly start a new ETF position, start doing a nice little weekly purchase there to complement my one share VIG. This is in my portfolio, not my wife's where we're doing SCHD. So,
Ooh,
question with this one is what is this $6,000 stock? This
what is it?
this would give me a nice base if I did sell it, dump it into the ETF. This would be a great foundation for me to start and then keep adding to it throughout the year. Lanny, this stock has been in a sector that's been garnering a lot of news over the last few months because of the high cost.
Oh, wow. Is it Oracle?
No,
Is it OpenAI?
no. In fact, I guess I don't really know how AI could impact this one besides messing with the supply chain or the
Messing
inventory.
with the ingredients or the
Yeah, which might have other ramifications. Today we're talking Tyson, ticker symbol TS,
Tyson.
and they just released their earnings and they shot up 13% in the last month. It was kind of a mixed bag. From the fourth quarter highlights, sales were up 2% from the last fourth quarter last year at 13 billion. Sales were up with some exclusions too. GAAP operating margin was down 70%. Operating income was up though 19% when you take the adjusted earnings. GAAP earnings per share 13 cents, down from last year. Adjusted EPS was up 25%. So have you
Wow.
noticed the trend here for what is happening with
Interesting.
Tyson?
Those adjusted earnings is always looking great.
Yeah, adjusted looks great. Ignore the GAAP earnings, ignore the
Just,
GAAP metrics.
add back in all the expenses.
Yeah, and obviously we're looking great. What is going on? Obviously, the cost of beef is through the roof, and that is what dominated there. What they noticed were shrinking margins for beef.
But you don't really think of beef when you think of Tyson. You always think of this through chicken.
Yeah, their chicken, which you've seen some obviously cost increase for chicken. You've seen some cost increase for the Genio, but you haven't. The way it's happening is with the beef. Beef segment reported a 450 basis point margin compression, 330 for the quarter, 330 basis points for the last 12 months. So they're getting killed on the margin because of those increasing costs for beef. USDA beef has gotten so high in price, they're expecting a 2% drop back in demand for Tyson. So now they're expecting a huge loss in that segment next year. So that
Ooh,
is what is dragging them down.
yeah, that's no bueno.
No bueno, indeed.
No,
No.
but again, like you said, they're at least trying to pivot. They're trying to manage costs, closing down that plant, opening up, hopefully better margin business to help offset possibly that loss in that beef segment. It should be pretty interesting in 2026. But this video isn't about adding or buying more Tyson stock. This question you introed in is it time to exit this stock to build on a new weekly purchase?
That's right. So what happened when it jumped up 13% over the last month after
What
the
happened,
earnings and
brother?
the closure of the plant? It basically brought my position back to even. I have 110 shares.
Back to even.
Yeah, 110 shares. The market value is
Ooh,
6,405 at
any
its current price.
optionality there, Bert?
Not really. This is a really tough stock to write options on because you can't write them weekly options. They are monthly options. So you don't really get a shot. And it goes up in $2.50 increments. So you don't really get there's not a lot of room for appreciation and premium in there. It might be like 5 cents for the stock to go up $1 over 4 weeks, which to me just isn't quite worth it right now. Yeah, our position is 6,400. Our cost is 6,407. So we are within $1 of being or $2 of being even on this position. So that's why it's funny. It's like we're back to even finally with Tyson. It produces $225 of dividend income. So losing Tyson because its yield is 3.5%, it would hurt us on the dividend income front.
Back to even. It would, yeah, $225. Obviously, the dividend growth rate is fairly low. If we run them through the DD stock screener, guys, PE right now is 15. Payout ratio is 53%. 5-year growth rate is under 4% now on the dividend growth front. 13 years of doing it. Yield is 3.5%. They've been a dog the last 5 years, negative 17% return. Yeah, obviously they've had a lot of volatility through COVID and post-COVID, for sure.
Right. So the question is this really the time to buy Tyson? They've been down so much. They're finally getting a pop back. But are a lot of these headwinds already built into it? Are the expensive price of beef, the decrease in demand, not just in beef, but chicken, other areas too, where consumers are like, yeah, is this still on the lower end of the spectrum for Tyson, or does it have room to keep going up if there is some relief for consumers? Conversely, there is room for it to go down too if consumers continue to be stretched and continue to have to cut the budget. Some of the premium products that Tyson might offer might have to go away. So those are the two sides, and I'm not really sure yet.
So with $225 income, with the $6,500 capital you could put to use, it sounds like you want to exit the business.
It does, and there are some contenders there.
I do.
I do. I mean, there's FDVV, which I've talked around and I've sniffed around about, which has a 3% yield, so that really wouldn't hurt too much.
Bert's been smelling around that for a while.
Yeah, the question is that the one I want to start building the ETF in? And that's what I'm using this month to decide, to see where I want to set up my 2026 in this regular purchase.
Or you just do it to JEPI.
I could do it to JEPI. I could do it to
maybe
VIP.
Half and half, JEPI, JEPQ,
yeah.
QQQQI.
Yeah, just start throwing the alphabet soup in there of all these ETFs. I don't know, but I'd love to hear your opinion, though. Would you hold on to Tyson a little bit longer, or ride the wave, see what you're going to get? Or would you sell it, be happy and thankful that I'm back to break even, and just use it as a wash and then start moving on?
And you're going to slow down the SCHD at some point, I thought.
Yes. Yeah, that's where it's what I'm doing for 2026 will be a completely, maybe it might be different. It might not be strategy. It's going to be realigning all of my ETFs to make sure that that's what I want for my weekly purchases.
Interesting. Yeah. Let us know, guys. What do you guys think Bert should do? Tyson, back to even after years and years and years of holding it. Almost $6,500 in capital. If he sells it, should he go into SCHD, back into VIG, or a new ETF such as FDVV, or even a different ETF where there's limited overlap, but consistent returns and consistent dividend growth? Let us know in the comments, guys.
If you haven't already, everybody subscribe to the channel.
Boom.
Give this video a thumbs up, and remember, you're either with us or you're against us. Jerk!
That was Bert and Lanny from the gosh darn Dividend Diplomats. Over and out.